Zoom just announced their earnings today, and I wanted to go over those earnings and then update my valuation on this company. Zoom is becoming a consumer staple stock if you think about it. Who's going to cut off their Zoom video? Businesses aren't going to do that. They really like the fact that they could have employees working from distances. They don't want to pay for their employees to go visit customers. Many reasons to have Zoom video services to make it easier, to make employees more productive and lower costs. So very quickly, it's becoming a consumer staple stock in my mind. And over the last year, the stock is up 28.83%, which looks good. Year to date, the stock is holding its value, but not really in rally mode. It's almost, replicating the S&P to some extent. What's interesting is that they have been buying a lot of stock, as you'll see in a little bit. They have lots of cash and they generate a lot of free cash. They grow a little bit and they have been buying back good amounts of shares. So that way, the current stockholders own a greater percentage of the company overall. So, looking at the earnings that they just announced, the company grew by about 3%. Not bad, but it'd be nice to see it grow faster. Now, the customers they really want to attract are these enterprise customers that spend more than $100,000 on Zoom. Those are really sticky. And those are the customers that I believe are really depending on the efficiencies, the cost savings, the flexibility, the increase in productivity that Zoom brings to their employees. They repurchased a lot of shares, 4.3 million shares in Q4. And if you look at their balance sheet, they reduced the share count. If you compare the Q1 2020 or the most recent quarter that just closed in 2025 versus the quarter a year prior, they got rid of 1% of shares. That's really good. That's really good. Their guidance is as expected. They're just going to keep being Zoom. I don't know if they have any growth opportunities or catalyst, but they just continue to create cash, generate profits, grow, and they are beginning to look like a staple to me. I don't know if that's good news or bad news. Let me think about it and let's get back into the fundamentals. So, looking at their fundamentals, the company is a $25 billion market cap company with revenue 4.67, so a little under 6 times sales. PE ratio is 25.66. Forward PE is 15, only 15. That looks good. Analysts like the company, but I think it's fairly priced. The revenue has been growing for the business. They had a boom period during COVID. And what's really good is they've kept all that revenue. It's not like they've gotten any smaller. And this, I think, could be a really good acquisition for another company. You think about how much revenue they could add, 4.6 billion very quickly. That is interesting. Now, when we look at their free cash flow, really good cash flow, and look at that growth. Man, 1.8 billion in free cash flow. They're trailing 12 months. Nicely done. And let's look at their gross margins of 75%, profit margin 21%, free cash flow margin 38%. Those are just phenomenal numbers, excellent numbers. I'm not even going to show you the balance sheet because it's great. They have almost $7 billion of cash and almost no debt. That is a phenomenal balance sheet. When we look at their forecast, 22 analysts cover the stock. Some are optimistic, some are pessimistic. On average, the stock is fairly priced. The earnings will pop up in the year that they're operating into $5.57 and then kind of stabilize there and just grow a little bit. So I'm going to use that number in my valuation. Speaking of which, the stock, in my opinion, is discounted by 43%. This is just a stable producer of profits and cash. So I'm glad that I own it. I'm going to continue to own shares and buy more shares of Zoom. It is a buy for me. There's few places where you can set it and forget it and really know that you're buying a very good company. And I think Zoom is that company. They're a very stable, pure play video conferencing platform. And I would not be surprised if they get acquired. Maybe Google buys them, somebody buys them and takes over this prized video conferencing application. Maybe Salesforce buys them, or maybe Adobe buys them. Somebody that's bigger buys this company because they're such an attractive business producing all that free cash. So that's my video on Zoom. I hope you found it interesting. Thank you for watching.